It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, February 4th, 2016. Wrapping up this first week of the month of February 2016. Don't forget, no newsletter on Friday evenings. Next newsletter will be next Monday. And of course, we have a jam-packed newsletter in store for you guys and gals. As we said in last night's newsletter, tomorrow is Non-Farm Friday. We got a plan for that. And we get a plan for crude, E-mini, gold, and of course the euro here this evening. Starting out with crude oil. Crude is range-bound and trading near the lows this evening. And a recent bear wedge at the range lows tells us to expect price to correct higher in the short term with a possible rotation target all the way back up to the highs from today's session. We get a plan for the oil traders tomorrow for Non-Farm Friday. The E-mini S&P is range-bound with a bull bias this evening. We have a recent test of the highs, so we can expect the sellers to push back down to the lows, where I'm sure the buyers will be waiting patiently to trap those sellers and send this price back to the highs again. We have that variable for the non-farm payrolls tomorrow, but we got a good plan for the S&P. How about gold? Gold is bullish and trading at the highs of the range, which tells the bulls to take their profit and wait for a correction lower before buying more tomorrow at a cheaper price. Boy, gold, one of many markets on a tear this week. Got a plan for the yellow metal tomorrow. And another market on a tear, the euro. The euro currency futures, they are bullish this evening and rotating off the lows of a major bull channel, which tells us to keep focused on buying on the way up to completing the measured move and up to those channel highs. We get a plan for both directions for all you euro traders today. I mean, we talked about last night. It was prove it time on the euro, and I'm going to go out on the limb and say they definitely proved it, right? We're going to look at that chart here in just a moment. Guys, we got a great plan for tomorrow's Non-Farm Friday. Before we jump into our charts, though, and go over our strategies for tomorrow, I do want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, check the description of the YouTube video. There'll be a link in the description to take you over here to our trading blog. A couple reasons why. First of all, I have a free pass for you guys and gals. If you're not a member here at School of Trade and you'd like to get access to our trade room as a guest for a day or maybe 2 or 3 days, grab your free pass in the upper left-hand corner there. In the lower left-hand corner, you can register for our nightly newsletter mailing list. Promise no spam. Every evening, Monday through Thursday, I'll send you an email. Usually it's around 7 p.m., 7:15 p.m. Eastern Standard Time, never any later than 8 p.m. Eastern Time. Sorry, YouTube was down last night. That's what delayed it last night. Anyways, all I need is your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email to make sure you're not a robot. And then, of course, right below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link below tonight's video, and you can download the charts and have them on your computer for tomorrow. Over on the right-hand side, you can register as a trial member. You can learn more about all the levels of membership we offer here at School of Trade. And, of course, we've always got someone standing by 24/7, 365 to answer all your questions. Don't be bashful, right? Hook up with us online with that live support app on the right side of our blog, and we can answer all your questions there as well. Now, we got a busy day in front of us tomorrow. We got Non-Farm Friday. Before we jump into charts, let's take a look now at the calendar for tomorrow. Shouldn't be any surprise. I've been talking about this all week. Tomorrow is, drum roll. Yeah, did you get any of that? Yeah, anyways, back to the plan here. Tomorrow's Non-Farm Friday. This is one of the 2 of those major news events that have long-lasting impacts in the markets. Last week we heard from the FOMC. That's 1 of 2. This is going to be the 2 of 2. Tomorrow morning at 8:30 a.m. Eastern Time, we've got the non-farm payroll report, right? International trade, no one even knows about that tomorrow. All eyes right now have shifted to the employment situation. The analysts, they got to sink their teeth into the ADP employment report. They're expecting a relatively consistent number tomorrow in line with the ADP employment report. But as I always tell you, the news is noise. We're going to be trading the reaction to that news. Honestly, I have no regard whatsoever what the news says tomorrow. All I need to know is what time the news is, trade around it, give it 10 to 15 minutes afterwards, and then follow direction afterwards. Now, it's always important that I remind you guys on a nightly newsletter before a big event like this. This is not your average news event tomorrow. Like I said, last week we heard from the FOMC announcement, right, last Wednesday. That was another example of a major news event that will produce extreme volatility and very low liquidity. It's a recipe for disaster if you don't know how to trade it. Tomorrow is not the day to move to a live trade account after practicing simulation. Tomorrow's not the day to go increasing your position size. Tomorrow's not the day to be trading in the afternoon. Tomorrow's not the day to go making any big risks or playing any big gambles. Well, that is if you like money in your trade account, right? Tomorrow is a day for you to trade carefully, especially if you're early in your career and you haven't seen more than 6 to 8 of these non-farm Fridays. My plan for tomorrow is to get in early, get my charts ready to go. I won't be taking any trades. Usually, we very rarely see very decent volume before the news number because it's such a big number. Most players are going to be sitting on sidelines waiting for this number to come out tomorrow morning at 8:30. At about 8:40, about 10 minutes after the number comes out, we should have an idea for how the markets are reacting. Then we'll do a quick update to our charts, make sure all of our trend lines, our channels, make sure we know who has control, and then we'll follow the plan from there. Very important. Please listen very closely. Yes, I'm talking to you too. If the market takes off on a tear tomorrow morning, this is what tends to happen on days like tomorrow where we have a big news event. If the number comes out excessively higher or excessively lower than they were expecting, you can follow that link on the Econo Day website and it will tell you what they're expecting. If it comes out dramatically higher or lower, oftentimes this market goes on a runaway freight train environment. Do not trade against the freight train tomorrow. I do not want to get that email tomorrow afternoon saying, you told me to sell at resistance here, I sold, and it just blew right through it. Again, you've got to understand tomorrow morning, once that news comes out, we're going to do a quick update to our charts. We'll be in our trade room tomorrow morning at 8 a.m. Eastern Time. We'll walk you through it live in real time. But what I want you to remember is I'm going to give you a plan for tomorrow. The plan has to fit inside the reaction to tomorrow's news report. If we have, for example, a bullish market going into tomorrow, but then all of a sudden it just takes off the downside, reckless abandon, steamrolling through all support levels, you are no longer going to want to buy that market, all right? So be careful tomorrow. Do not trade into, do not try to stop a freight train tomorrow if it ends up getting into that environment. And if you don't know how to define what that feels like, if you don't know how to do that, that should be your clue to either A, come join us tomorrow in the trade room, or B, practice on a simulator tomorrow, but very, very careful if you've never experienced a non-farm Friday. I don't want to scare you, but I just don't want you to get run over, right, like I did early in my career because I didn't respect the power that comes out with these types of news events tomorrow. And again, we don't get that many of them, right? This is the first Friday of every month, and then FOMC is only 8 times a year. So we don't have that many of them, but tomorrow is one of those, all right? So promise me, wear your helmet, buckle your seatbelt, make sure you stretch before the session begins. And again, find somebody who knows what they're doing, right, and follow along with them if you haven't traded a non-farm Friday before. Most important thing is be careful before, wait 10 minutes afterwards, right, and then you should get a good idea of where we're headed from there. Okay? Now, jumping right in this evening, let's start with crude. We'll go crude, E-mini S&P, gold, and we'll wrap up with a very, very interesting chart on the euro tonight. Crude oil is range-bound and trading near the lows this evening, and a recent bear wedge at the lows tells us to expect price to correct higher in the short term with a rotation target up around 33.54 overhead. Once again, inside this trading range, the range rotation target is up at 33.54, and we will give the buyers 2 attempts to reach that level. If the buyers fail to reach the highs of the range, we expect to see the bears attempt to make a measured move, most likely to test 29.82 before the buyers get another shot at sending this price higher. Now, this is a very simple trading range environment. Before I talk about it though, I just want to make one comment. We talked about this last night. Remember this last night? We talked about this range between 33 and 35, right? Remember this last night, right? We talked about this what I call the reversal line, right around that 32.80, 33 area, right? And then of course all the way up to 35, right? We looked at it last night in last night's newsletter. Remember what we said last night, right? It's going to try to get up there, and if it can stay up there, it'll go to 35. This is a classic example of rejection, right? So they jump up, they immediately, you can see, literally got chewed up and spit right back down in, completely negating that huge push higher that we all rode up, right, in our trade room this morning. So very, very just awesome opportunities to ride it all the way into it, but it was completely rejected. This definitely has me thinking here tomorrow. We have some major news, and that major news is a big variable, but it definitely has me tipping my hat here right now to the bears, right? It definitely feels like we have a major rejection at that 33 level. Now, I don't want to go too much into it because, again, tomorrow we have that big news event. So, flip a coin and we'll see what happens tomorrow. But the bottom line is, most important thing right now is we have a trading range. What do we know about trading ranges? Range rotation, right? Range rotation. We're going to rotate from the low up to the high, back down to the low. Here we are down at the low, and then we're going to try to rotate up to the high. Now, let's talk about that rotation up to the high. It's very important that you understand that if we miss this rotation, okay, this is a very important piece of this puzzle for tomorrow. Again, I'm kind of walking up. We're walking on a little bit of eggshells right now because we have that big news tomorrow. So once the news comes out, again, this market could really take off one side or the other. It's difficult for me to anticipate it until I see it tomorrow morning in real time. Okay, so we find ourselves rotating inside this trading range. We're down at the lows. If we make it up to the highs of that range, we'll then continue the rotation back and forth. But what I want to remember is that rejection of that 33 level gives me a little bit of an edge to those bears. So I'm anticipating now, give the buyers 2 attempts to get up to the high of that range. This is really important. If they can't get to the high of that range, sellers are going to see it as weakness, and buyers are going to most likely see it as a failure, and they're going to get out of their longs, which of course results in selling opportunities. What's going to happen is it's going to shoot if we fail rotation. We call this the 2-try rule. Give the market 2 attempts to finish the rotation. If it can't finish the rotation, we shoot to what is nothing more than a range expansion, right? Take the size of this range, copy and paste it down, right? Copy and paste it up. It's the same. It's just a symmetrical range expansion. That's all it is. Okay, now, ready? 1, 2, 3, back to the chart. Now here we are at the low of this trading range. There's the rotation target up at 33.54. Now, do I know if it's going to make it all the way back to 33.54? Absolutely not. There is no way for me to tell because, like I said, we have major news tomorrow. But we do know, though, that the lows of this range, we look to give the buyers 1 try, right? There's resistance overhead. Give them a 2nd try. If they can't after that 2nd try, again, this is what we call the 2-try rule. Give them 2 tries. If the 2nd try, they can get up to 33.54, now this range is intact, and then we'll expect a rotation back down. The exciting part tomorrow happens if we don't succeed, right, with that second attempt. If we don't succeed with that 2nd attempt, if we can't get to that 33.54 after the buyers tried twice, and we have a very simple formula for how we count the attempts, I'll teach it to you in my trade room tomorrow morning. It's very, very easy. We keep things all very, very easy. Now, difficult to anticipate, but this is where the measured move will come in. Right now, I'm doing my best to give you a measured move that doesn't correct. But if we do get a correction back higher, look for a measured move going lower, and that's going to be a nice short-term target. right? Difficult to tell where that measured move is going to be, but that's where that target for those bears are going to be tomorrow. The absolute long-term target, again, if we try to go higher once, twice, we can't make the move higher. Now there's that 29.82. Now what's 29.82? 29.82 is nothing more than take this trading range, copy and paste it down, right? It's just a big range, that's all. And so now that's going to be what we call the two try. If they fail off the second try, this is what I refer to as the pendulum swing. Okay, come out and join me as a student, and I'll teach you all of the terms that we use. Two try rule fails, pendulum swings in the opposite direction, and those sellers are going to be gunning $30 a barrel, 29.82. Okay, so now what's this wedge playing in here? Well, this wedge gives us a definite edge to the buyers right now. We move lower. This wedge is way too easy to see. Everyone's going to see this wedge. I can't imagine I'm not the only one seeing this wedge. So we know we have a bearish wedge, and a bearish wedge kind of goes against our intuition. It's a bullish. Once it finishes that move down, once it gets down to that tipping point, right, it's going to bullishly shoot higher. So buyers are looking for traps. Sellers try, right, buying into their failures at these lows. The bottom line is at these lows, we're looking for any opportunity right now. I like to use failures. So new lower low, wait for the sellers to try to sell it lower. We know where their stops are going to be, and we'll be looking to buy into the stop losses of the sellers to shoot it higher. Once we go shooting higher, one attempt, two attempt, if we make it to the high after a second attempt, then we target back down to those lows, right? If we can't make it back to that rotation target after two attempts, right, now the sellers start aggressively jumping on this. Again, like I said earlier, grab a measured move target, right? That'll be the easy one. And then look for that rotation target all the way back down around this 29.82. If we look a little bit bigger picture on this, we can definitely see there is a trend line that's coming up here off these lows, right? This may end up being where this wedge ends up breaking down, right? Again, there's no way other professionals aren't seeing this, right? So I would expect here to see price jump up. Sellers think it's bearish. They try to sell it. Professionals know where their stops are, right? And they're looking to take them out, right, to get that juice to buy that low. Then as we go higher here, again, there's another trend line overhead, so I would expect that to be the first push. Second push, right, again, if it makes it, we then rotate down, right? If it runs away, right, if we happen to get a runaway tomorrow, that next range rotation is all the way up at 35.40, right? If we happen to go to the high, right, if we get to the high, then rinse and repeat. Give the sellers two attempts, right? Two attempts, right, to get down to that 31.68. If they can't, see ya, suckers. We're heading to that 35.40, right? And of course, targets overhead at the resistance areas marked overhead. All right, guys? Again, wait for that news to come out tomorrow. We'll see what it looks like after the news comes out, and then we're going to play, right, what we see from there. The range is the most important thing right now. Right now we're at the lows. We're looking to trap low, shoot higher. Once we see it go higher, though, can they finish that rotation? I really do think that's going to be the biggest clue. Can they finish that rotation? If they can't, we collapse to 30. If they can, we either go back to 31.68, right? Or we finish completely pushing higher up to that 35.40. All right, guys? Come see us tomorrow morning. We'll be trading this live in real time. Let's keep moving. On to the S&P. E-mini S&P is range-bound with a bull bias this evening, and with the recent test of the highs, we can expect the sellers to push back to the lows where the buyers will be waiting to trap the sellers and send this price back to the highs. Very similar to what we just saw in crude oil. We have yet to attempt a breakout of this range. Look, we've been rattling around on the inside of this range. We haven't even attempted a breakout. What that tells us is to look for a failure on both sides. There's definitely a bullish bias. You can see the market going higher before it went into this sideways range. So the bias is definitely bullish, which means the most reliable opportunity will be a trap low to buy the low and send it higher. we will be using range rotation tomorrow for the best clues, especially if rotation fails, right? That 2-try rule we talked about earlier. So, a lot of important information on this chart. Clearly, the market is bullish going into this trading range. That means buying at the low is going to be your most reliable trade. Like I said earlier, whether you look at the range or you look at this in the form of a wedge, we haven't broken anything yet. And when we have a trading range, breakouts almost always fail. The first attempt to a breakout is almost a guaranteed failure. So the fact that we haven't even broken anything yet tells me that whatever side this thing breaks out, you're going to be able to fade it. What's the most reliable side? Definitely the buy side, which would mean a break of any of these support levels, right? Break lower, snap higher, right? So what the buyers would love to see is a break lower, preferably trap low around this 1890 area. Let the sellers try to sell it, and then, of course, the buyers can buy that low, going with the bull bias, buying low rather than buying high, right? And then, of course, the rotation target is back up at that high right now. Okay, now, if we do shoot higher, keep an eye out. We've got measured move targets overhead, right? Larger measured move targets if it corrects lower, right? And, of course, we've got plenty of areas overhead. Look left, and you can see there's a bunch of trend lines coming in around these areas. So, as of right now, trap, buy low, sell high, right? Buy the low, take profit at the high. Selling the high is going to be less reliable than buying the low because of the bull bias, right? And again, really the most important thing right now is where the most reliable opportunity is going to come. Range rotation, right? Range rotation. High, down to low, up to high. Okay, if history repeats itself, it's going to try to go lower. Trap low, we want to buy that low. Rotation target back up to the high. Now, look at this another way of looking at it. Okay, let's go back a few stages. Here's another way of looking at it. Sellers try once. Sellers try twice. There's that 2-try rule. If they can't get to this 1895, guess what? We're going to see this as a failure. And it's going to not only hit that high, it will go through that measured move, but it's going to be gunning for, any guesses? The pendulum will swing 1950, 1948, right? We'll call it 1949. That's where the buyers are likely to try to push this thing higher in tomorrow's session, right? So use your trading range. High to low, low to high, high to low. Are they going to make it? Sellers try twice, right? If they can't make it, measured move target, range expansion target, all the way up. Again, the buyers would really like to see it trap low, struggle to keep going so they can buy that low and take it back to the high. If we get to the high, it rotates back to the low, right? If we can't get to the high, 1, 2, right, then the pendulum corrects and will swing to find a new balance area. Trading ranges are really special environments. They're very easy if you know what you're doing. Fade the breakouts, buy low, sell high. The bias, of course, is bullish right now, and look for those failed 2 tries on the S&P. Let's keep going. A little bit easier markets here now. Gold, the yellow metal is bullish and trading at the highs of the range, which tells us the bulls are likely to take some profit here and wait for a correction lower before buying more tomorrow at a cheaper price. We have a bull channel and a trading range to work with at this time, which tells us to look for buying opportunities during the rotation back to channel highs and to look for an opportunity to buy the low of that range if we get if we happen to get a gift from a bear trap. So first of all, there's a couple things here right now. First, we have this bull channel. Now, we talked about range rotation, but now let's talk about channel rotation. We go from the high of the channel down to the low of the channel, up to the high of the channel, down to the low of the channel. Where's the next target? You got it. Up at the high of the channel, right? We talked about range rotation on gold, on crude in the S&P. Now on gold, we're talking about channel rotation. Now, just like we talked about with range rotation, The big clues come when we don't complete the rotation, right? Think about it. When something doesn't happen that is supposed to happen, professional traders take notice, right? So we know that we're expecting the price to rotate higher here, but what if it doesn't, right? If it doesn't finish the rotation, look for a measured correction, right? Measured correction, and then that leads me, of course, into the trading range. You guys are experts now on range rotation. We go from the high down to the low, up to the high. Where do you think we're going next? Down to the low. How many tries will I give those sellers? I'll give them 2. I'll give them 1 try. I'll give them 2 tries. If they can't complete the rotation down to that 49.9, where do you think we're going next? We're going to shoot higher, and we're likely going to complete, obviously, the measured move, but the target will be 1164.1, right? That's the range expansion. Okay? The pendulum will swing. Now, go back a few steps here. If we complete the rotation lower, we now expect rotation higher. If we cannot make the rotation higher, what's going to happen? It's going to trap low, and it's going to try to dig down to 1142.8, right? That range rotation and the 2 try rule. Again, like I said, once you understand how it works, it becomes really quite easy. And you've probably heard me say this before. If I could trade one type of market for the rest of my career, it would be exactly this, right? It's a trading range with a bias. We get a bullish bias, which tells me look for trap lows. Look for price to go lower. Look for sellers to confuse this with a bearish market. We know where their stops are, and we want to buy the low of the range using failure patterns. All right, guys? Keep an eye on that range rotation. And obviously, we have a long-term measured move here, right? If this thing pushes even further, right, than that 1146.1 area that we talked about before. Okay? Look for trap lows at support levels below, right? Trap lows at support levels below. Again, with this bullish market, it definitely will be easy to see anytime the buyers get a chance to buy this at a cheaper price, they're going to take advantage of it. If you want to be a seller right now, the hard part for sellers is you're going to have to really get away from that range low. And it's going to be really difficult to find an open area of interest here to be able to get short. So buyers, as it pushes lower, just wait for those sellers to fail. Just keep waiting for them to fail. It's difficult to tell how far down it will go, but stay patient for it to fail, and you'll get rewarded by being able to buy at a very nice low price. Now, wrapping up here on the euro is bullish this evening and rotating off the lows of a major bull channel, which ultimately tells us to keep focused on buying on the way up to completing the move to channel highs and the measured move overhead. There's a major measured move all the way up, right? Overhead, you can see. Now, this week has been nothing but bullish, which tells us we may see a correction lower before this price finishes the move higher. So bulls, stay patient for a trap low, just as we talked about on gold, around any of these major support levels below, right? These support areas below are going to make just tasty areas. If this price shoots lower, we go into support. Sellers will confuse this with a bearish market. They'll try to sell it. We know where their stops are, right? And we'll look for price to reverse, right? Buying into their stops. Now, this is an area where if we do hold that pullback, bears, you guys can get short here down to these targets below, but just be careful though. Just be very careful right now. Again, look left. Don't have too much amnesia right now. Look at this market. This is a very, very bullish market right now. Now, with all that bullishness, it definitely tells me that buyers will likely want to buy this even with a really deep correction here, right? So any of these support levels below are going to make for great trap lows, right? Basically, price takes off the downside, sellers try to sell it, buyers see this as a bargain price now, and they look to buy it up. Right? So the most important thing right now is, if you're a buyer, is wait for it as it pulls back and just wait for the sellers to fail, and that will give you the opportunity to buy into their stops. If you're a seller, you really got to be careful, because unless you sell it right now, you got a lot of support, especially that 56.5 area I'm circling right now. That's going to be the key area of support. If we can break below it and hold a pullback, then you can start having some confidence to get short here. But, again, without knowing what the news looks like tomorrow, it's very difficult for me to say be a bear right now in the euro, right? We may get a push lower in the short term, but look at the chart. I mean, you've got to think anytime this thing goes lower right now, the bulls are going to look for any opportunity to buy this thing up. Looking at the daily chart, right, we talked about this last night. Here's that flag. What an interesting scenario right now, right? There's that flag. They buy it up, and literally we are right at that measured move for that flag. So that tells me we may, and again, I don't like to use a daily chart for day trading because it's not relevant, but it definitely is interesting right now. They certainly proved it, all right? I would say that. They certainly proved it if you watched last night's newsletter. But, couldn't you see them coming back down? It's a doji. Oftentimes daily candle dojis, they like to trap lower, right? So maybe we'll go back, trap low, and then shoot higher early into next week, right? Very difficult to tell without knowing what tomorrow morning's news will look like. But again, I wouldn't be surprised if we get a relatively deep pullback here before this thing shoots higher. Again, until we see tomorrow's news, I can't give you much more than that. So be aware, as this price goes lower, stay patient for the bulls, look for the sellers to fail, and that's going to be your reward, right, for your patience to wait. Guys and gals, awesome week this week, right? What a great week. What a great week. I want to remind you before we wrap up for the week here, I do my nightly newsletter Monday through Thursday evening. The next newsletter will be next Monday evening. Don't forget to stop by schooloftrade.com, register for our free trial. It's that big button right on the homepage. That way you can learn more about what our strategies look like here at School of Trade. We have 3 levels of membership, and we have always someone standing by 24/7 to answer all your questions. Don't forget to share this video with a friend, right? I know you've got a lot of buddies that would love to learn and earn right along with us every night. Give me a thumbs up on the YouTube video. And again, keep in touch. If you have any questions, my email address is jj@schooloftrade.com. Enjoy the weekend. If I don't see you tomorrow morning in our live trade room, rest up. We'll have another big week ahead of us next week. And of course, as I always say, right, be well out there, be nice to each other, and I'll see you in the mañana. We open up at 8 a.m. Eastern time. Adios, amigos. Bye for now.